Alright everyone, Cowboy Trades here. Welcome to the channel for an update on crypto.com CRO. So crypto.com against Bitcoin just broke down into new bear market lows today, and while this is happening, we're seeing a fractal repeat. The last time this happened, crypto.com was setting up for an explosive move. So I'm going to talk about all this and more, what to expect in the higher time frames, what my price targets are, and also what my price targets are in the lower time frames. So let's dive into the lower time frames and work our way up. On the daily, you can see drawing our Fibonacci from the swing low up to the swing high from the lows that we put in place in December, down at 5.5 cent. You can see we've obviously had this huge rally to the upside. EMA ribbons fired long. We broke to the downside quite recently and went all the way back down to backtest this 786 Fibonacci. Now, we are still within this golden ratio. We just pushed up to the 0.5 Fibonacci, and it looks like we're solidifying a strong rejection. In fact, you can see over on Tuesday, we topped. Over on Saturday, which is today, we put in a lower high, and it looks like we're starting to get pushed back down for the markets. Now, since the EMA ribbons have fired a short, you can also see we've beautifully reversed back into these. We did push up twice to the long-term moving average, and 2 times over we've got rejected, and it looks like we are starting to move down at this moment in time. Now, it looks like the price to keep your eyes on in the immediate short term, if we are going to continue breaking down, is this 618 Fibonacci. This price target is all the way down at basically 7 cents. 7 cent on the dot. If you do drop beneath 7 cent, the next price target is your 786 Fibonacci at 6.3 cent, which is quite a big drop. It's about a 12% drop, at least a big drop in terms of the daily time frame. Now, what I've also got my eyes on for the daily time frame is this rounding top. It does look like we are losing a lot of momentum right now in the markets. If we do draw our volume profiles, focusing on the range that we're quite recently trading in. So looking at what happened from the December lows, incorporating this data and incorporating the data that we're traded in right now, you can see the majority of the volume in the market is right here, but we also have a tiny bit of data traded right around here. So, you know, more or less, this is where the biggest cluster of liquidity has been traded in the market. Since we did break back down to the downside to the 786 Fibonacci, you can imagine there are a lot of positions trapped around about here. So what did market makers do? We pushed back up to grab this liquidity pocket, and now it looks like as we have grabbed liquidity from this range on the daily time frame, we are slipping beneath the EMA ribbons on the daily. So it doesn't look too hot right now on the daily time frame. We do have a rounding top. We've grabbed liquidity. We have been rejected from the daily EMA ribbons, which have already fired short, so this could be an indication that we are confirming the trend to the downside. We'll talk about how this affects the higher time frames in just one second, but all in all, signs are pointing that we are going to be coming back down, probably to this 786 Fibonacci in the immediate short term, down at 6.3 cent. Now, also one other thing I do want to show you on the daily before we do move on to the higher time frames is this bar pattern. You can see we had a parabolic run up, we solidified this spiky top, we've broken down, had another spike, and this is normally when you see bar patterns come all the way back down to where they originated. For crypto.com, this is down here at 5.5 cent, indicative that we could be witnessing in the next couple of weeks or so a 24% drop in the market. Now, is this going to be a double bottom? Are we going to shoot to the upside and head to $1 like every crypto.com YouTuber is talking about, or are we going to break down further, potentially to the 1.236 Fibonacci at 4.5 cent, or do I have my eyes on something slightly different? Well, this is where we're going to zoom out to the higher time frames. Now, I'm going to keep this daily chart here because there is also one final thing I do want to talk about over on here. But first of all, let's talk about what is going on the weekly time frame. Now, you can see right now over on the daily time frame, it looks a little bit cleaner, although the head is probably going to turn out to be nicer over on the weekly time frame. So let's keep it on the weekly time frame. You can see, depending on how you draw it, if you're coming over to the daily time frame, I think you want to draw the range lows with this blue box over here. However, if you are on the weekly time frame, I think it makes sense to draw this trend line. Either way, they pretty much come at the same apex, around about 5.5 cent. What you can see that we are playing out right now is something like a head and shoulders pattern. Now, obviously, this is still relatively up in the air as we haven't even completed the head, let alone started the right shoulder, let alone come back down to the neckline. So This is a pattern that could be pending for the markets, but as we did discuss, this is a BART pattern right now, and a BART pattern price target will be all the way back down at 5.5 cent. You can imagine if we're coming down here, it's very likely that we have a retest of something like a 786 Fibonacci before breaking down, which would cause something like this, a head and shoulders pattern, to start forming for the market. So once again, price target of this is very similar. If we're looking at the trend line, it's not going to be too much different from the price target we looked at a second ago, about a 24.5% drop for crypto.com. And on the weekly time frame, you can actually see we're already solidifying this huge rejection from the weekly short-term moving average up at 9 cent. Heiken Archies on the weekly have started to bleed out, so this does look like we are going to be coming back down to the neckline of this. And of course, daily time frame, we are just confirming whether this EMA ribbon on the daily is going to be flipped as resistance as we do come down to the price targets we just mentioned. So that's really the pattern I wanted to show you on the daily. If we do zoom out, you can see the last time crypto.com displayed this pattern was right over here. We had a beautiful head and shoulders coming down to the neckline, bouncing up, forming that right shoulder. The price target of this was right here. If we look at this, the price target was down here at 6.4 cent, and we actually exceeded this and went down to about 5.4 cents. So it is possible, if we're looking at the price target of this head and shoulders pattern, that this could take us down to round about 3 cent, which is very interesting, approximately 3.2 cent. Now let's come over to the daily time frame and see our next Fibonacci level to the downside after the 1.236. You can see we have a 1.618 Fibonacci right on 3 cent. More precisely, 3.07 cent, which is pretty much 3.1 cent, which is also pretty much 3.2 cent, which we've got over on the weekly time frame. So we've got a lot of confidence around about this 3 cent level just above it, and it is possible we could exceed this just like we did with the previous head and shoulders pattern. So now you've got my price targets on the daily, obviously the 786 Fibonacci in the short term, 6.3 cent, and then coming down to fulfill this BART pattern at 5.5 cent seems very likely. On the higher time frames, coming over to the weekly, you can see this 5.5 cent shows up again. If we do have a bounce from here, don't be too surprised if we come up to something like a 0.5 Fibonacci, maybe a 382, but we form something like this over on the head and shoulders pattern before breaking down to the downside and fulfilling this price target, literally, once again, round about that, 3.15 cent if we break down somewhere round about here. Now, if we move on to our next chart, I want to show you something even more interesting. So we have currently been getting rejected and battered against the bull market support bands for crypto.com, moving lower, lower, and lower. You can also see when we were done with this previous head and shoulders pattern, we were getting rejected from the bull market support bands before that major bearish engulfing candle, which just absolutely nuked us into new lows. What's also interesting about this is with this most recent bounce, it has been quite a strong bounce for crypto.com, and because of this, the stochastic RSI actually managed to get all the way up to 98.5, and it has crossed bearish on the weekly time frame, and it is calling for a monumental move to the downside. Now, look at what happened the last time the stochastic RSI crossed bearish. The blue moving average was only up at 72, and bear in mind, right now it pushed up to 98.5. So, with this, you can see we are crossing bearish right now. We've broken down from the top over here about 23.5% so far, but we did break down 36% before the bounce. Even though we've broken down 36%, you can see your oscillators are actually still more overbought than they were before this major capitulation. And if we look at the stock has a pretty good history of, crossing. Let me go back to the start. So you can see, grabbing this, stochastic crossed bearish when price was trading around about 48 cent, and we nuked to about 10 cent. Stochastic then crossed bearish round about here, which was around about 12.5 cent, and we continued to break down to about 9 cent. We broke back up. Stochastic crossed again when we were right here at 12 cent, and we nuked down to about 5.5 cents. So the stochastic RSI has got a pretty good trading history on the weekly time frame for crypto.com, with calling these major parabolas back down to the downside, and we're seeing that it is more overextended than it has been in previous trading history. Now, MFI as well, money flow index, lots of liquidity has flowed into this market quite recently, and that is why we're also seeing, you know, a lot of your altcoins are overextended right now. Crypto.com's MFI is up at 66.5, and the total altcoin market, which is a problem for Crypto.com, is running into a huge area of resistance. So it is possible not only Crypto.com but a lot of altcoins face more pain in the coming weeks and in the coming months, judging by the oscillators, judging by the rejections on the bull market support bands, rejections from the EMA ribbons, forming these head and shoulders patterns, which, you know, previously have called nasty moves to the downside. Daily time frame, we're showing weakness, we're getting rejected, we've got a rounding top, we've got a bark pattern, we've grabbed liquidity. It's just not looking too hot for Crypto.com right now. And with that being said as well, where is another price target that we can look at? Well, let's look at where the major liquidity is in this market. If we come over to the Crypto.com OKX pair, this more or less started trading when Crypto.com flipped from, I can't remember, it's been so long since I looked at their old coin, obviously because it's outdated now. But if you didn't know, Crypto.com wasn't always the native coin over on the Crypto.com ecosystem. It was called something different before. I don't remember the exact name, it's not important. But OKX more or less listed Crypto.com as soon as it started trading when they switched pairs. Now, what you can see over here is if we're looking at the lows, or basically if we're looking at all of the trading history for Crypto.com, and we plot the volume profiles, you can see where has the most liquidity been provided, where's the most data been traded. It is right down here at 3.5 cents. So what have we got? We've got confluence at 3.5 cent. We've got volume profiles, lots of interest in the market. We've got Fibonacci pairs at 3.1 cent as well. If we come over to the head and shoulders, we've got price targets around about 3.15 cents. So between 3.5 cent and basically 3 cent, there's going to be a lot of interest in the Crypto.com ecosystem. And unfortunately for the bulls, if we're looking at a conservative price target out of all the ones we've looked at, you know, coming down to 3.5 cent could mean about a 50% drop for Crypto.com, plunging into new bear market lows. Could that be the bottom? We will have to see. Of course, I'll keep you up to date if this video does well. If you do want more Crypto.com updates, then do let me know in the comment section down below. I'll consider covering this more often if it does well and people want to see this. But all in all, things are not looking too hot right now. Crypto.com, like I said at the start of the video, is breaking down into new lows against its Bitcoin pair. The altcoin market is running into a huge area of resistance. And all in all, altcoins are not looking too hot right now. Lower time frames and higher time frames, we've got a lot of reasons to be slightly cautious on Crypto.com in the coming weeks and months. But with all that said, my friends, that's all I've got. You know my price targets in the immediate short term. I do think we are going to be coming down, fulfilling this bar pattern at 5.5 cent. And in the higher time frames, between 3.5 and 3 cent is really where I've got my eyes on for Crypto.com. So for today, my friends, that's all I've got. If you do enjoy these updates on Crypto.com, let me know down below in the comment section. Leave a like and a comment down below. If you want to further support the channel, you can click on the join button and become a member. Come and follow me over on Twitter at 618_cowboy. But I'll leave it here for today. It's been your boy Cowboy Trades. I'm out. Peace.